just come off the Will 2023 be the year that equity capital returns to Energy panel here at the New York Stock Exchange. So thanks for your insights, very interesting, and hopefully we can pick your brains a bit further on some of the points that were raised. So maybe just to kick us off, what are you seeing in terms of managers lining up to launch funds in 2023? And then along those lines, before that, maybe what's necessary to attract LP capital?
Yeah, thank you, Ben. We do see a lot more managers coming back to market in 2023 in oil and gas. Some are managers that have been around a long time, and some are new managers. So they have different strategies, they have different track records. Obviously, the industry's gotten to a place where return of capital is very important, both public and private. So on the private equity side, I think it's going to be important to look for investors who are returning capital. And I think also, pursuing oil and gas through a value lens as opposed to a growth equity strategy is going to be important to creating value. Meaning, you're buying cash flowing assets at attractive valuations on entry. You can improve those assets in a number of different ways, but you're also focused on cash payout to investors. I think it's important that investors look for new strategies and opportunities to invest in oil and gas. And then remember that these companies that are investing in oil and gas, or these managers who are investing in oil and gas companies, those companies are also doing a lot to invest in new technologies as well. So thinking about energy transition. I think, the private equity oil and gas industry is coming off probably a historically low year of capital fundraising last year in 2021, 2022. About $3 billion a year. Keep in mind, they used to be like 45 a year. So I think if you see something like anything north of 10 billion this year is very possible. And I think it's up to the investor to be discerning and to find the right opportunities, whether those are directs, or seeded, preceded portfolios, or managers offering attractive terms.
Brilliant. Well, I guess obviously looking more closely at Waterous Energy Fund, and we heard from Adam in Calgary earlier in the week as well, and on Monday, and you're obviously invested exclusively in the Canadian market. And Canadian E&Ps, as we've spoken about in the past, trade at a discount to their US peers, and offer the highest free cash flow yields in North America. As the industry re-rates, are they offering a better return rate or more attractive investment opportunities today, in your opinion?
Yeah, so those go hand in hand, right? So as equity trades lower, free cash flow yields go up, and vice versa. And so that is the case today. Canada doesn't always trade at a discount to the United States industry. When investors are bullish on the space and they see opportunity, Canada historically has traded at a premium to the United States. When you've had kind of capital pull back from the space, that the opposite happens. So what's interesting today is it does seem that investors are interested and attracted to investing in oil and gas, but Canada continues to trade at a discount. So that's probably the interesting point there. We're not solely focused on investing in Canada. Historically, we have put our capital to work in Canada as value investors, buying cash flowing assets with long reserve lives, low maintenance capital requirements, i.e. low natural decline rate assets, and high margin assets. And we've been able to go after those types of opportunities through complex situations. There's been limited competition in Canada. So, if you look on a relative basis, we really like the dynamics of that market, and that continues today. So we do see attractive entry multiples in Canada. We're also looking in the United States, to be fair, but we do see attractive entry multiples in Canada today, assets that can generate very robust free cash flow yields, and ultimately assets with long reserve lives, because you have to be able to produce through the cycle with the price volatility that we're seeing. What you don't want is to chew through all your inventory and find yourself either drill through a low price environment and earn unattractive returns on the drilling, and then find yourself without the inventory to be able to produce through higher prices.
Brilliant. Thanks, Henry. And I know a couple of years ago, you and the team at Waterous Energy Fund launched or published an op-ed on peak investable oil. Do you want to maybe just explain that concept or that theory?
Yeah, thanks, Ben. So Pensions and Investments published this op-ed for us in December of 2021. And actually 2020, excuse me. So this was coming off the pandemic lows, where we obviously saw massive declines in oil demand as folks stayed home. So I'm not really sure how many people read it, to be honest. But the concept of peak investable oil is quite simple. If you think about the percentage of global oil production that is investor owned, it's about 30% going to 20% over this decade. So by 2030, we think that roughly 20% of global supply will be investor owned, and the rest will be government controlled, nationalized oil companies. And in a lot of those instances, those are countries with poor human rights records. They're autocracies, i.e., the easy way to say it is that supply is controlled by the bad guys. And we saw what happened when Europe became overly dependent on Russia for natural gas supplies. So we obviously published this op-ed, and we didn't expect for Russia to invade Ukraine, which is an atrocity. But this is really important. National security is contingent on energy security, and we think people need to pay attention to that. And what's nice about investing in Canada and the United States is that you have rule of law and transparency. You have environmental requirements and regulations. Canada is the only oil exporting nation in the world with a carbon tax. And so our business today has a number of projects that we're focused on to reduce CO2 emissions, methane emissions, to improve water recycling and those types of things.
Henry, thanks for your time. Always good chatting.
Thank you. Great to be with you.